Hi traders, and welcome back to capitalforextraining.com. We now start a series of strategy videos, and in this particular video we're going to be looking at a trading strategy called trend lines. Now, trend lines are an absolutely fantastic tool to use, or a fantastic strategy to use when you're looking to get into a trend that's already taken place, either in an upwards direction or a downwards direction. And the job of this particular strategy is to join that trend and ride it out all the way till the end in order to maximize your profit. But before we actually start, talking about the strategy and how you can use trend lines, what I need you to do is go and insert the momentum indicator onto your charts, just like I've done here. And once you've done that, if you can set the period at 14, okay, so what that means is that the momentum indicator is going to focus on the last 14 trading sessions that you have in your price chart. Once you've done that, if you go to your drawing tool, select the horizontal line and then draw a line at the midpoint, which is exactly 100. Okay. Bear in mind, if you're using various software or other software other than MT4 or MT5, that measurement will be 0. For some reason it's different in other software, but the actual positioning is the same. So if you can do that and make sure the line doesn't delete or doesn't move, that would be great. So what we've got here is a market. We can see from this point up to here is an overall uptrend. We have a rise up to the top here, a slight pause, a slight downtrend, and then an uptrend again at the top. But overall, we've got an uptrend, and that's what we're going to focus on, an uptrend for now. We're going to do a downtrend straight after, as an example. Now, I'm going to zoom in a little bit at the bottom here. So we're exactly the same period. We've just zoomed in slightly. When you're drawing trend lines in an uptrend, they can only be drawn from the bottom. Okay, not from the top like that at all, always from the bottom. When you're trading downwards and you're looking to trade a downtrend, then you draw them from the top like this. Okay, to explain that a little bit further, what you've got here is a very basic uptrend. Now, the market will never just go straight up. What it will have is a number of swings until eventually it goes up right to the top. All swings are areas of the price movement where the price have just stalled or paused slightly in order to get some more fuel in its strength and then shoots back up. So we've got a swing there, we've got a swing there, and a swing there. So if you imagine me drawing a line, it would be a curvy line, but in general direction it will always be going upwards. Okay, so the market always moves up in swings. The job of the trend line strategy is to join those swings in the direction that it's going to. So, like I said, when we have an uptrend, we only draw from downwards, from underneath the price chart, and we can see by joining swings 1, 2, and 3, we've got a trend line, and that is the number that you have to bear in mind. A trend line is only a trend line if it has 3 hits on it going in the upwards direction. Okay, not 1, not 2, but 3. So we've got hit 1, hit 2, and hit 3. Okay, the second rule that you need to remember is when drawing trend lines, the first hit, when you're drawing in an upwards direction, the first hit always has to be the lowest point of the swing, so the lowest shadow. Okay, not the body but the shadow. So I'm just going to get my cursor and put that there. Okay, so that's hit number 1. However, when you're trading swings 2 and swings 3, the rule changes. You can still continue just trading, just joining up the swings by shadows, but you can also join up the lowest point of the body within that swing. So you can see I've got swing number 2 here. I've got a black candle here and a white candle there, and I can see that the open of the white candle is the lowest body. Okay, and that's the point that I want to. That is hit number 2 for me. So I will put a line there. Okay. The same rule applies for the third hit. However, you can see that in this example, if I join these up, there is no bounce, and the trend continued to go downwards. But what I will do is join this here. Okay, I will draw trend. I will connect the bounce, which is third bounce here. However, if I zoom in even more, you can see that the second hit, which is here, just there, you can see that it's just missed. It's just missed the bounce off the trend line, and this is why you can. Oh, I'm just going to move that back a bit. This is why it's crucial that you allow yourself to join bodies on the second and third hit. So if I join this body here, it's not going to work. But if I join the third body, which is this candle here, I'm just going to move it out of the way so you can see clearer. You can see I've got a black candle and a white candle, and I can see that again the same rule applies. The open of the white candle is the lowest body hit of that particular swing. So I'm going to draw that, okay, here. So I'm just going to extend the line so you can see what's happening. But we've got hit number 1, hit number 2, hit number 3. And the reason why you allow yourself to join bodies on the second and the third hit is so that you don't miss out on trades. Because if I draw if I just join the shadows up in this particular uptrend, I will only have 2 hits. Number 1, that wouldn't be a hit, and then number 2. But if I join the body of the third hit, I can see that I've got 1, 2, 3. It doesn't matter that the shadows have gone underneath the line. The important thing is that they haven't closed over the line. Okay? So I'm just going to zoom back out a little bit. So we've got a third hit, and now that I've got a third hit, what we need to do is wait for the price to close. Don't trade it until the price closes, because you need to let the market show you what is happening. Okay? Don't make the mistake of trading this if it breaks an area like here or something. You wait for the market to close, and then it has nowhere back. That candle cannot change. What you've got here is a reversal pattern where you've got a small black candle and a large white candle engulfing that body, and it's basically a bullish engulfing pattern. Which is a 2 candle pattern that we've discussed earlier in our course. So I've got my third hit. Okay, now don't just use a trend lines on their own and start placing buys. What you need to do is refer to the momentum indicator. And the momentum indicator, if you're not sure how it works, then please refer back to our previous videos where we discuss it in detail. But for those of you who know, if I'm just going to get my cursor here, I'm just going to line up with the third hit, which is here. Okay. Now you can see that the momentum indicator is showing a measurement above 100, which is there. Okay. And when it's showing a measurement above 100, it means that there is an uptrend taking place. If it's below 100, I wouldn't trade this, because it would suggest that the market is in a downtrend, okay, or that it's going to be in a downtrend soon. But because it's showing above 100, I've got 3 hits on my trend line. I've waited for the close. I've joined the bodies and the shadows on the second and third hit. I've only used the shadow on the first hit, and for me, that's a signal to buy, and I would buy there. And you can see that there are millions of traders around the world who did exactly the same thing, because all the rules have been met. Okay, and the sheer volume of that strategy has catapulted this price chart to more than 7,000 pips from the point of the third hit. Okay, so that's how you trade the trend line. Obviously, what you need to do is set yourself a target and also set yourself a stop loss. Okay, so the first thing we're going to discuss is the target. The target always has to be the next swing. Okay, so in this particular example, the target wouldn't have actually been that much. Okay, it will be this swing here. Some people ignore these kind of swings because it's just made up of shadows. So at the point at which the market closed, okay, I'm just going to draw a line here at the close. Oops. So the white candle here that we're looking at, it's closed there. So we're interested in areas above there. Okay. Now some people don't take this swing here into consideration because it's just made up of shadows. What they do is consider this swing here because you have bodies in the way. So what they would normally do is set their target to here, which is just underneath the top of that particular swing. But what we're going to do, I'm just going to move that out the way. What we're going to do, in fact, no, I'm just going to move that back down, is I'm going to place my target here, okay, which is just underneath the bottom of that swing, okay, and that alone can deliver me on a daily chart, you know, just under 200 pips, okay. If you're using smaller time frames, obviously it probably wouldn't be worth trading because the spreads would be a little bit too high, but your target is always the next swing, and just a few pips below it is a great place to put your target, okay. If you get to that point and sell half of your order, you would have benefited from the rest of this here, okay? So don't just, let's say for the sake of the argument, you play $1 per pip, okay? Don't sell the full dollar when it reaches this target here. What you sell is the 50 cents, and then you leave the rest of the 50 cents to basically go in upwards direction, and then you've not lost out on this trade here, okay? Then what you need to consider is a stop loss. Well, that's very simple. You've got I'm just going to draw a line here, which is the bottom shadow of the third swing, okay? That's the point which is very important, and all you have to do is place a stop loss to just a few pips below that, so that you give your price just a little bit of room to move, okay? But if it goes below, I'm just going to zoom in here, okay, which is the second line, which is the lowest horizontal line that you can see here, that's the point at which you get out of the market. So the target is just below the top of the next swing, and the stop loss is literally the opposite. It's just below the third swing, which is the third hit of the actual trend line that's taking place. So that's how you trade the trend going upwards. Now I'm going to zoom out, delete this. And we're now going to show you an example of trading a downtrend, okay? We've got lines there. I'm just joining up the swings, but I would not take that because I can see that the indicator is above 100. So even despite the fact that it's gone down drastically, I would not take that trade because the chances are that you could have got caught out. So we move on. We look for the next one. Let's have a look. Oh, here we go. Okay. So I join them at the top, and remember this time I'm drawing the lines from the top, not from the bottom, because we're going in a downtrend. We've got one hit, two, great, fantastic trade, okay. I'm just going to zoom in slightly. So I start at the top, which is a shadow there, then I've got my second hit, third hit, okay. So I'm just going to extend that line there, okay, and you can see that on the third hit I've got a reversal pattern, okay, which is basically a white candle followed by a strong black candle. This one's closed more than halfway into the white candle's body, and momentum is showing below 100, and it hasn't just dropped, it's gapped. You can see that everybody's been doing exactly the same thing, and your target is the bottom of that swing, okay. So I'm going to put a line there, just a few pips above it, really. If you want to be extra safe, then just use the bodies and just move that line up just a little bit above the bottom of the body of that swing there, okay. And then you know, it's still a great way of trading, and in fact it's probably a lot more safer to trade that way. But the initial target can be just below here, and you can generate a few more pips that way. So that's your target, and your stop loss is there, which is basically the top of the third hit, and just a few pips above it is where you put your actual stop loss. And like we said, just a little gap so that you give your stock just a few, or give your price a few pips to move around, just to give it enough room in case it needs to bounce back in a downwards direction. Okay, so that's how you trade trend lines. What I would suggest is that you watch this video while you're trading, or just write a few rules down that were mentioned, such as if you're going in an uptrend, you only draw lines from the bottom. You always start at the bottom shadow on your first hit. The second and third hits can be drawn using the bodies of the candles or the swings. Your target is the next swing up, and your stop loss is underneath the third swing hit. If you're trading in the downtrend, your lines are drawn from the upwards direction or from the top of the price chart. Your first hit always has to be the top shadow. Your second and third hit can be used can be drawn using bodies or top of the bodies of the second and third swing. Your target is the next bottom swing, and your stop loss is just a few pips above the third swing high, okay, or the third swing hit, okay. And I think if you write those rules down, you simply cannot go wrong with trading this strategy. It is very simple. You just have to train your eye to recognize swings and in order to draw those trend lines, and always make sure that your momentum indicator is either above or below, depending on which direction you're trading. So if you're trading upwards, it needs to be above 100, and if you're trading downwards, it needs to be below 100. If it's at 100, don't trade it, because it means nothing. It's not either above, it's not below. There's a lot of uncertainty, so you can't trade it. Okay guys, good luck with that strategy. Hope it works out the best for you. See you for the next video.